Hello, welcome to another edition of Bitcoin Brief. We've got the legendary Tone Vays, trader, educator in Bitcoin. We have the iconic Bitcoin cowboy Jimmy Song with us as well, the former contributor to Bitcoin Core and author of books on Bitcoin programming. So it is Monday, June 8th, and we've got a lot of cool stories to talk about. How are you guys? Tone?
Good, good. Waiting for the world to go back to normal. So I can actually hang out with some friends. I don't know if you saw, I tweeted out. So I had to actually go get an illegal head shave from my barber in his basement because barber shops are not open. But if you own a pet grooming business, that's fine. So I guess if someone takes me to the barber shop on a leash, I can get a real haircut. And also, social distancing rules are still in effect unless you're having a protest. So if you're going to have a barbecue with over 10 people, just make sure everyone brings a sign and you should be fine. This is the world we're living in right now. It's completely insane.
Jimmy, how are things in your part of the world?
Well, I guess I'm gonna have to have a backyard barbecue for George Floyd or something. I find it hilarious, especially in New York City. A lot of the Hasidic Jewish community is gathering with signs, justice for George Floyd signs, so they can have Shabbat and all that. Yeah, it's hilarious how they're getting around the social distancing restrictions just by invoking the name of George Floyd somehow. But yeah, Austin's great. It's hot here already. Can't wait for some sort of vacation.
Excellent. Yeah, I'm Christine Lee, a New York-based reporter, and New York is reopening to phase one construction. Manufacturers are opening up. Retailers are opening up if they haven't been boarded up from the looting last week. And the various closures from COVID-19, and they're opening up for curbside pickup and in-store pickup. So with that, that's what's going on in the world today. Let's take a look at what's going on in Bitcoin. I'm gonna start sharing my screen here. And here we go. All right. First story up. Securitize debuts on-chain royalty payouts for lottery.com security tokens. So this is interesting. Digital security manager Securitize, a blockchain-based transfer agent, has delivered a royalty payout to holders of one of its issuers' security tokens, a company first. So it's distributing a royalty payment to holders of lottery.com security tokens on Friday. Securitize claims it has become the first registered securities record keeper, a transfer agent that also disperses token holder payments entirely on a blockchain. Securitize declined to disclose how much in royalty payments it had distributed, though I'd also be interested in how much Securitize earns from each royalty distribution. Transfer agents maintain and update securities ownership records as well as distribute payments like shareholder dividends or interest to owners. But transfer agents aren't always paying agents, the ones actually delivering those payments to shareholders, as Securitize essentially says it has become. So, Tone, what's your take on, security tokens and this new effort from Securitize to then royalty payments?
There's a couple of reasons why the story is in here. And obviously, this company hasn't been that much in the news. I remember briefly hearing about them a long time ago. So it's good that we're bringing it back up. So my couple of questions. Like the world needs another freaking lottery. Like the shit coins aren't enough, that they actually have security tokens around this lottery. Now they managed to get around the SEC security laws somehow by registering these things as actual security tokens. But if you go back to the article, and I'm really disappointed at CoinDesk once again, you guys were one of the first major publications in crypto. Yet your writers are still mostly terrible because they're not giving you, they're not providing anything useful. For example, what blockchain is being discussed? The word blockchain gets thrown out here. If you just scroll to the top of that article, and they're like, oh, this is, oh, no, sorry, not that far up, like the actual like body of the article. Like it's there. I think in the first paragraph right there, a transfer agent that also distributes tokens, also disburses token holder payments entirely on a blockchain. The use of the terms a blockchain is completely meaningless. And I understand that someone from the mainstream media doesn't understand that the word a blockchain is meaningless, but your CoinDesk, I attempt to hold you to a higher standard, even though Jimmy might laugh at that statement. Like, don't, like this show tries to break down news articles within the crypto space, but how in the world can we break down this article to tell you if this company is bullshit or not, if you are using terms like a blockchain without being specific at all? I have more to say, but maybe I'll just throw it over to Jimmy on his thoughts whenever he sees a blockchain in a crypto publication.
Yeah, it's kind of a crazy situation. Like they seem to have a central database that they're calling a blockchain, and basically they're I guess distributing funds. It's interesting because they actually have to deliver value to their shareholders in the form of dividends. So apparently a lot of it is being done through USDC, which is a stable coin that I think Coinbase is involved in. So the fact that about half the people received it that way tells you what you need to know. The other half, I guess, received via ACH. So I'm not sure how decentralized this is, guys. Like, we're receiving money via ACH. There's no anonymity to owning this at all. And I mean, it's just sort of like a normal, any other normal corporation that's dispersing dividends. I don't know why, blockchain has to be involved in any way whatsoever, because because of the security laws, what you have to do is have AML KYC anyway. If you know who they are, why do you need a blockchain? Why? I mean, I guess USDC could possibly be maybe a little more convenient than ACH, but like there's nothing involving blockchain that's needed here. This feels like just kind of like a story to hype blockchain, which is so 2017.
I'm wondering, what are your thoughts on digitizing securities, or in this case, royalty payouts?
I mean, they didn't really, so I'm not sure what that would look like. I mean, I guess if you had it on some other platform, it could be considered some form of digitization. But I mean, like most corporate dividends are digitized already. They just go into your brokerage account, and they're handled through whatever backend system. This just seems like a different backend system, and they're using the word blockchain to sell more of their services or something like that.
Yeah, no, and that's the other thing I try to tell people. Like, it's revolutionary. We're gonna digitize securities, and my answer to them is, isn't Apple stock already digital? Well, like, what are you revolutionizing? like almost everything is digital. The only thing that isn't digital is the paper $100 bills, which are a lot more of a blockchain to me because they're anonymous than anything happening in this company.
Yeah, it's crazy that this is what passes for technology these days. I mean, they probably have a central database that they're managing, and they're calling it a blockchain for some reason. I really don't get it.
I'd also be curious about, how are they extracting profit from the royalty payments themselves? Is that something they disclose?
Well, if they're running a lottery, they're keeping 50% of the money. I mean, that's how a lottery works.
Yeah. I mean, I don't know if they're owners of lottery.com or if lottery.com is a securitized customer or something. But I mean, either way, there are lots of ways to make money off of this. So I'm sure they're getting their VIG somehow.
And they're not the only ones. Well, look at this. Securitize is looking to bring its royalty disbursement service to the company's real estate partners next. Securitize is one of a handful of crypto-focused transfer agents registered with the SEC, along with Harbor and TokenSoft. I'm curious about your overall thoughts on this effort to cooperate with the SEC, play with digital securities, Tone.
No, I mean, it's the same thing. Real estate, same thing. It's already digitized, right? The real estate itself is in physical form. That's not going anywhere. You're not going to put real estate on the blockchain unless it's like digital, real estate, your plot of land in World of Warcraft or whatever the hell they play over there. So your land is physical. So the dividend payment on that land or mutual ownership of that land could have digital securities on it, but we have that already. You don't need a blockchain for that. And the blockchain doesn't help you. So it doesn't matter. They can, it's just a weird story that CoinDesk should have no business covering, because this has nothing to do with a real blockchain. And I hope CoinDesk knows that, but maybe they don't.
Yeah. And just one last thing. What are your thoughts on Harbor and TokenSoft and Securitize, Jimmy? And their tech?
I mean, I don't know their tech, and it's not open source, so it's hard for me to really comment on it. But it sounds like a central database. I don't really understand what the big deal is there.
All right, let's take a look at our second story. Coinsquare CEO confirms client data was stolen by a former employee after report of SIM swap threats. Okay, dun dun dun, intrigue. Canadian crypto exchange Coinsquare said that an internal theft last year by a former employee resulted in personal information on some of its customers landing in the hands of a hacker or group of hackers. Details of the incident were included in a story published earlier this week by news outlet Vays, which reported that the hacker or hackers intended to use the information, which contains email addresses, phone numbers, et cetera, to perform SIM swap attacks. Now, according to the CEO of Coinsquare, the person quoted in the article is likely a former employee that stole data a year and a half ago. He also goes on to say that, according to Diamond, the referenced individual is trying to tarnish Coinsquare's reputation as a secure cryptocurrency exchange over theft that happened in the past. Why else would a hacker contact a reporter who would then tip off the company, he said. Tone, what's your reaction to this response from Coinsquare?
It's funny how they're trying to downplay a data breach that they never disclosed, which they should have at the time. So I'll keep it short. A lot of the companies in the crypto space have no freaking idea what they're doing, because it's amateurs and high school dropouts starting these companies, and not the high school dropouts like Mark Zuckerberg, who was a college dropout, not a high school dropout, but more like college dropouts that were never going to have the ability to graduate college. And that's prevalent, and they don't have much of a much of an ethics either. So this should have been known about after it happened, not a year and a half later. Coinsquare is trying to downplay the significance of this, and it does show the incompetence of the company based on who they hire and how they manage other people's data and other people's potential Bitcoins. So no, it looks bad, and it deserves to look bad.
To me, this seems nothing different from what other digital sites, centralized e-commerce companies have to battle with getting data stolen. In this case, they're blaming it on a disgruntled employee. What's your take, Jimmy?
Yeah, I mean, they got caught by this Vice article, apparently. It's hilarious that they're spinning it as if it's, somebody's out to get them, and they're just trying to make Coinsquare look bad. No, Coinsquare made Coinsquare look bad. The fact that your former employee had access to all of this data, without proper controls and so on, just reflects really badly on you. And the fact of the matter is the people that have got this information are going to attempt to do SIM hacks. And these are people that have accounts on at least one exchange. If they have accounts on other exchanges, these are actually very valuable targets that can possibly get compromised. If I were a Coinsquare customer, I would be suing their pants off right now. The fact that my information was spread out into the public, that it wasn't disclosed to me, that I now potentially have SIM swapping attacks coming up against me. That's a giant liability, and I can't imagine any customer that would be happy about something like this happening. They deserve all of the negative press that's coming to them, and all of the public relations fallout that's going to happen, and all the lawsuits that are on their way. This is a terrible practice. They should have disclosed it soon after they found out that somebody stole it. The fact they either didn't know about it for a year and a half, or they knew about it and didn't tell their customers. Both are highly one is just incompetent, the other is unethical. Either way, it's terrible.
Yeah, either way it looks bad. And you're right. We don't know if they knew about this, or the Vice article caught them by surprise as much as it caught their users by surprise. But again, it just shows the continued, and not that this doesn't happen in the traditional finance world, but I've been banking with for what, over 20 years now. And I've never seen an email from my bank saying, oh, your information's been hacked. So it's possible to lose security, but in the crypto space, it's very rare. Few companies can pull it off.
Yeah. They do say they have leveled up. Diamond's saying the crypto exchange leveled up its internal controls to ensure employees could not remove data from its CRM systems. Diamond said users whose data had been compromised have been contacted about changing their account information and enabling two-factor authentication. Not sure when they told users of that, but and unclear of what this leveling up of internal controls means, but
I mean, it doesn't mean anything. They got caught. They want to, make it sound good for the article. We've leveled up our security. It doesn't mean anything. It just means we think we might have done something that might slow some of the hackers down. They don't really know.
All right, taking a look at the next story. Coinbase offers US Fed's new crypto surveillance tools. So Coinbase is getting in on the government blockchain analytics game. The behemoth cryptocurrency exchange has initiated procurement deals with the DEA and the IRS for a cryptocurrency investigations tool called Coinbase Analytics, according to publicly available documents. Coinbase Analytics has close ties with Coinbase's entire product ecosystem, as its senior product manager collaborates with Coinbase Consumer, Coinbase Pro, the Coinbase Custody, as well as Coinbase's payments and crypto division, according to an undated but now closed job posting. Let's take a Tone, what are your thoughts on the DEA, the IRS, and Coinbase getting together and sharing these crypto analytics?
Well, so once again, the lead Coinbase hashtag is back, and it should be back with a vengeance. I keep reminding people that I think the first or the second article I ever written on my blog before I ever spoke publicly, before I ever spoke on YouTube, when I just wanted to get a couple of articles out there before I start being public, so that there'll be some kind of history of me writing. And no one read the article because no one knew who I was, but the article was about why not to use Coinbase. And this was back in like May or April of 2014. So if you go back to my blog on tonebase.com and you look at the first 2 or 3 articles, you'll see how I'm talking about, staying away from Coinbase. I recognized it long ago. And are you going to go to it?
Yeah.
Yeah, Coinbase.com, and then oh no, misspelling it. But and
I think.
so my view is this: Coinbase was one of the first companies, and they should be leaders, but they're not. They're doing everything. Oh, you want to go to the blog section? Just click on blog. Yep, right there. But then you want to do it in kind of reverse order, or if you want to scroll down to the first month of publications. Yep, keep going. March or April. I don't remember which one it was. One of those. Yeah, no, that was only one article that month. That's it. That first one. That could have been it. That could have been it. Nope. If you go back, yeah, if you go back, that might have been it. I'm either talking shit. Yep, I'm either talking shit about Coinbase here or in one of the other articles. Anyway, so look, Coinbase should have been fighting for Bitcoin and privacy the whole time, instead of voluntarily complying with everything the government wanted from them. And instead of now helping the government spy on their users, Coinbase had 6-7 years to help fight the government surveillance and to help not only crypto people with more privacy, but everyone with more privacy, even those that aren't even in crypto, because traditional companies could have looked at the leaders of Coinbase and how they're fighting for their users and their financial privacy. And that could have been, a spark to help the traditional banking system also maybe start to fight the government, because they're private companies. Your bank doesn't want to spy on you for the government. Google doesn't want to spy on you for the government. They want to spy on you for their ad revenue, but they don't want to spy on you for the government. Facebook doesn't want to spy on you for the government. But if no company is willing to fight for users' privacy, it's never going to happen. And Coinbase had a chance to do that for its users, but they completely went in the opposite direction.
And it's not just them. Coinbase joins a crowded field of cryptocurrency analytics companies, Chain Analysis, The Elliptic, CipherTrace, and others vying for a piece of the federal pie. And I think this contract talked about, a $250,000 contract. Jimmy, what are your thoughts in this kind of partnership with the government, federal agencies, if you will?
Yeah, I mean, it's one thing if you're getting subpoenaed for documents from a court order. That's one thing. Selling your data to a government agency, that's like way past that line, right? It's actively like showing disdain for your users. You're selling the data that you have on your users to the government so they can better enforce its laws. They're acting very much like a monopoly here. They think they have the entire crypto market in the US locked up. And that's the only reason why you would try to sell a product like this to the government. I mean, it's one thing if you're just complying with their orders. It's another if you're trying to profit by selling this data over to the government. Now, I can't think of a better reason to delete Coinbase than this story, because the way crypto chain analysis works is that the more that you know about the network graph, the better your surveillance is going to be, the better it's going to be to more easily figure out who sent what to whom and who owns what and so on. Now, they're obviously using the data that they know, and the data that they know is all of the exchange data, exchange transactions that are coming in or out of their accounts. So they have that part of the graph down. What they're banking on in order to sell this data is that data constitutes a chunk of what these government agencies want to know. So if you delete your Coinbase account, you're giving them less data to be able to sell to the government. So it's not just, they're pissing us off, let's just delete Coinbase. They're actually going to use whatever data that you're creating by depositing or withdrawing from Coinbase in order to further analyze the blockchain for the purposes of whatever the DEA or the IRS is doing. So it's I see it as a moral imperative to delete your Coinbase account at this point, because essentially you're helping the government or you're helping this company make more money from this other product that has nothing to do with the exchange.
Yeah, hashtag delete Coinbase. Okay, so the next story we've got. Will anyone follow the? Oh wait.
Nope, that was just me.
That was Tone. China could force Donald Trump and the Fed to destroy the U.S. banking system. Interesting. Okay, Donald Trump has reignited his long-running battle with China, something that's likely to heavily feature in his re-election campaign. Meanwhile, China is poised to launch a digital version of its yuan and could be about to create serious problems for the U.S. banking system, potentially forcing the U.S. to digitize the dollar to compete. Now, the Federal Reserve has warned central bank digital currencies might one day replace commercial banks, creating a deposit monopolist and playing havoc with the banking system. Okay, so, Jimmy, I think this is super interesting. China has been trying to lead 5G and now a digital coin. Could that force the US's hand in entering a digital currency? Or what are your thoughts on that?
No, I don't think so. I think this writer doesn't know what the hell he's talking about. The dollar and the yuan are already digital. Like vast majority of U.S. dollars, for example, is it's not in a printed form, right? It's only like 6% of the currency or something like that. That's in $100 bills and other things. Most of it is a ledger entry in some database. That's digital. That's the nature of the thing. I mean, what he's like, look at the guy's title, right? Billy Bambro. I write about how Bitcoin, crypto, and blockchain can change the world. He doesn't give that many details on exactly how this is going to actually, change everything and disrupt the U.S. banking system. Hand wavy statements like this, just with lots of fear mongering that, oh, the U.S. is going to fall behind, and all these bad. We don't know exactly what bad thing's going to be happen, but we're going to be behind China. They're the enemy or something like that. It's got like so little depth to it, and this is trash that kind of rises to the top when we're talking about blockchain tech. Essentially, the Federal Reserve wants to upgrade its IT system because it is built on 70s technology, the automated clearinghouse, or the ACH system is from the 70s, and the technology is very old. But nobody really wants to upgrade because IT infrastructure upgrades are notoriously expensive, very difficult to implement, and oftentimes fail and cost hundreds of millions of dollars. So nobody is really motivated to upgrade that stuff, but they know that if you upgrade it, it can be very efficient. So that's what the Federal Reserve was talking about. They want to upgrade the system. They can't really justify it, especially given the track record of IT infrastructure upgrades throughout all industries. So this is sort of like a convenient way to make that happen. Just like one of the sticks, oh, China might beat us on this. It's not necessary, but it's something that they want to make it seem like it's urgent or something. That's what this story seems like.
All right, I'll just read a bit more. Okay, in this article, the introduction of digital currencies may justify a fundamental shift in the architecture of a financial system, a central bank open to all, according to Federal Reserve of Philadelphia researchers wrote in a 32 paper called Central Bank Digital Currency, Central Banking for All. The paper examined the potential effects of giving consumers the possibility of holding a bank account with the central bank directly. Wow, something that could potentially replace commercial bank checking accounts if the competition from commercial banks is impaired, for example, through some fiscal subsidization of central bank deposits. The central bank has to be careful in its choice to avoid creating havoc with maturity transformation, the paper read. Tone.
Yeah, this is all stuff that was in one of the bills for the stimulus, I think, and this was a possibility that was bandied about. I mean, it's something that could potentially happen. Maybe with enough of an IT infrastructure upgrade, it could, and these would be definitely benefits because you could give checks, give $1,200 checks to everybody. Just directly instead of having to, figure out where they live and mail them a check. You could just deposit money straight into their bank account. And
do you think that would be more efficient? That would be more effective? That would, and what this paper argues is that that would put commercial banks, make them antiquated, basically.
No. It would be more like consumer banks. I think commercial banks loan out to companies. That's the idea of a commercial bank. It would be more the consumer banks that would be antiquated because now you probably won't have like a minimum fee, or you probably won't be able to overdraft, and they won't charge you overdraft fees and things like that. So there's a lot of good that could come out of an IT infrastructure upgrade, and that's what they're pushing for, and those are the benefits that they're describing. It has really nothing to do with blockchain, honestly. That's it has to do with money, but it doesn't. It's kind of weird to put it in those terms.
Tone, want to weigh in on your thoughts here?
Sure. Once again, we're going to be covering this article every week, like we've been covering for the last few years. Here comes the Chinese digital currency or another country's digital currency, and for some reason unknown to me, they want to create a new currency instead of simply stopping the printing of physical cash. All this is the elimination of physical cash. Now, if we're going to talk about the elimination of private banks, that's a huge problem. That's basically the path towards socialism and communism. I remember when I wasn't old enough when I lived in the Soviet Russia, Soviet Union, for my own bank account, but my parents had a bank account, and you didn't exactly have a choice of a bank. It was like the Soviet Bank of Russia, right? Like there was just one bank. It's one giant communist country. The government controls everything. So they can say whatever they like. How much easier it will be. People can get their government stimulus checks, which is also insane. I was talking to a good friend just yesterday, and she has a nanny for her 1.5-year-old, and she's like, my nanny wants to quit. She realized she'll make more money on welfare than working for me. So this, of course, makes it much easier for the government to keep people from being productive members of society and just feed them cash directly into their government bank account. This also removes a giant sector of the private economy, where people move up the ladder, not based on seniority, but based on their abilities to do a job. If you ever been to the DMV, you know what it's like. Imagine your banking services being equivalent to your DMV services. And it becomes a complete disaster. But here's the worst part. The worst part is if the government goes to this national banking system, then basically your taxes just get deducted automatically. There's no physical cash. The good news is you may not have to file taxes. The bad news is you're not going to know exactly what those taxes are. They'll just take it from you. And the moment they don't like you, they'll just freeze your money. The moment they don't like something, they'll just take the money away. It's still a little difficult for the government to confiscate your money from a bank account. It's not that easy. You may think that it's easy for the government to come and take money out of your Chase bank account or Bank of America account or your PayPal account. It's actually not that simple. There's a lot of rules and regulations that the government agents have to follow in order to confiscate your money from a private bank account, which they still do. Now, there'll be no paperwork whatsoever needed if they're holding your money. They'll just take it. And that's the worst part about something like this. So we changed the discussion a little bit from China's creating its digital currency, which is our usual topic, to what happens if the government decides to also be a bank.
The article makes that point as well. If people started to exclusively hold cash with the country's central bank, the Fed and other central banks could end up becoming a deposit monopolist, attracting deposits away from the commercial banking sector. So into that whole idea of
yeah, it can also introduce negative interest rates pretty easily that way. And one of the things about cash is that it has a 0% interest rate, so it's hard to introduce negative ones while cash still exists. So I agree with Tone. It's a stepping stone to socialism, and I don't like it. But thankfully, there's Bitcoin, so there we go.
Yep.
Okay.
Hey, but hey, the sooner this comes, the sooner Bitcoin will go to where Jimmy's sitting right now. So it's great.
All right, our next article, Bitcoin's average transaction fees fall by 83% from post-halving high. The average cost of a single Bitcoin transaction has plummeted from high levels that followed the Bitcoin halving. So let's take a look at, in brief, the cost of the average Bitcoin transaction fee has plummeted. They were high right after the Bitcoin halving, but since then, fees have fallen by 83.7%. Jimmy, what's going on here?
Well, so I mean, we've talked about this quite a bit. You know, the mining subsidy went from 12.5 to 6.25. Price went up somewhat to compensate, but not enough. So some of the miners were taken off. You know, like just not put into, like they were retired or whatever. So that means that there was less mining hash power, which means that the blocks were a little slower, about 12 or 13 minutes on average. It took a couple of weeks for that to adjust, and then difficulty adjusted downward. So it got easier by about 10%. Now blocks are flying, and as a result, you know, you're finding there's a lot more block space, meaning that people are able to get in, you know, transactions for almost like 1 sat per byte and so on. So I mean, this is what we expected. This is how we said it would play out. If miners stopped running their miners, that the difficulty would adjust in order to compensate, and that's exactly what it did. So they're making it seem like it's some momentous event. This is exactly how the economic incentives of the Bitcoin network are supposed to work. So yeah, I mean that's a good thing. I don't see it as anything surprising.
Tony, your take on it?
Yeah, I don't have that much to add. The fees got high. Now, look, the fees are still very high compared to what it was in the beginning of the year. I think the fee is still like 250% higher. So it's 5x or something like that, or like 2 to 3 times higher than it was in the beginning of the year. But the fees have been coming down. If we can just go straight to the mempool from here and take a look at what they are. But yeah, every time the fees spike to the upside, more people start using Lightning, more people start to pay attention to their transaction fee, more companies start to look into better tech, you know, in order to lower that transaction fee. And then things go back to normal, difficulty adjusts down because there's probably less mining, and the system rebalances. It's an ecosystem. It will always rebalance.
Which transitions well into the mempool analysis by Jimmy. Take it away.
Yeah. Yeah, if you can scroll down a little bit, you can see that you know, the every transaction was clearing over the weekend. So today's Monday, so you can see the spike there, and the previous spike was, I think, last Thursday. So you can see that everything has was pretty calm during the weekend, and there were non-full blocks. I think the last time we did this show on Friday, and you know, a lot of that has cleared, but. Yeah, it's Monday, so there's a lot more transactions that got put into the mempool. Specifically, there's a lot of 1 sat per byte transactions. That's that big pink blob there. There's some in the purple, which is between 1 and 2, and then some in the blue, which is between 3 and 4. But yeah, I mean, there's a decent amount, but it's not that many. If you go to the blockchain tab at the top, Christine, we can take a look at like how many blocks it'll take. So right now, if you want to get into the next block, it'll be about 21 sats per byte. The block after that, though, is 3 sats per byte, which is insanely cheap. 3 sats per byte is extremely cheap. And if you want to go overnight, 1 sat per byte's probably going to be hard, but 2 sats per byte will certainly get you in the next 10 blocks or so. And, you know, I mean, it's overnight, there tends to not be as many transactions. So you should do pretty well. Also, if you scroll down a little bit, we can just sort of see that there's been you can see that there's been more blocks mined per hour, right? Like you can just sort of see it by the number of blocks and the timestamps on the left. And that's because there's more the difficulty adjusted downward. Not only that, but the price has gone up a little bit. So the combination of those two things tend to make mining more economic. Also, there's more and better mining equipment continuing to come out from MicroBT and others, which helps for all of this.
Yeah, and the hash rate hit a new all-time high this weekend as well.
Oh, it did? I didn't see it.
Yeah. Well, I look at the hash rate on TradingView. I don't know if that's the most accurate way to look at it, but on TradingView, we had a spike this weekend that was higher than anything else. Prior.
No,
at least based on a 7-day average, it looks like it hasn't hit its peak, but you know maybe like a 24-hour average or something like that.
Yeah, I'm not sure what they're using.
Okay.
All right, dollar cost averaging Bitcoin.
Yeah, this is a cool website. A friend of mine from South Africa, shout out Jay, sent me this site, and it's really, really cool. And it's very simple to use. You just put in how much you want to dollar cost average, or how much would you have made had you dollar cost average. So right there on the left side, you have $10. And do you want to do that weekly or do you want to do that daily? And then how far back do you want to go? So if we set that back to, well, let's put it back to when I joined the crypto space, probably about 6 years now. So if you change accumulated for 6 years and starting 6 years ago.
I think it's 7. You joined in 2013, no?
That is true. Wow, 7. Yeah, make that 7. So had I just been dollar cost averaging for the last 7 years, this is how much I would have made. Just $10 a week. I would have invested $3,660, and I would have made $60,000 by now. So that's what it would have been as that dollar cost average of just $10 a week. So it's just a really cool site.
Can you make it 9 so I can see how long it would have been for me?
9 years. Yeah.
Ooh, max. All right.
Yeah, Jimmy's been around a little longer than me.
4,700 for 1.3 million. That's not bad.
4,700. Yeah. So there you go.
Nice.
Just $10 a week, and that's what you would have right now. Someone had a really funny one. They tweet it out every now and then. So the first time Peter Schiff talked shit about Bitcoin was like $1 around that time. So someone does like a calculation for him. What if Peter Schiff invested $1 per day into Bitcoin since the first day he talked shit about it? How much money would he have? And then alongside, if he had done the same thing with gold since that day, how much money would he have made? And Peter Schiff would have like an extra $million-something for $1 per day.
They should count it in ounces of gold. He would have probably an extra like 1,000 ounces or something like that.
Something like that, crazy. Yeah, something insane. So it's just a really, really funny calculation. If anyone finds that tweet that goes out every now and then, tag me in it. It'll be fun.
Excellent. And we want to remind people that Jimmy Song is the author of Programming Bitcoin. If you want to learn how to program Bitcoin from scratch, this is the book you want to get. Jimmy, any talks coming up or anything you want our viewers to know?
Not really, other than this book and the other one, which the Little Bitcoin book is being translated. We're still working on that. Yeah, it turns out like trying to get like an Arabic layout on books is kind of a headache because the language reads in the other direction and stuff. So like printing it is actually kind of difficult. So Yeah, we're working on some stuff. We'll see when that comes out. But yeah, other than that, yeah, both books are available on Amazon. And if that's that, you know, might make for some good quarantine reading if you're not protesting.
Excellent. All right, with that, we've got some technical analysis from Tone once he gets his screen back up. I've just been watching the markets. We're still in rally mode. All US benchmarks are up. Airlines and cruise lines are going crazy on the top of the S&P 500. The top sectors performing are manufacturers, factories, as businesses begin reopening across the United States. We see a lot of reopening in those sectors in phase one reopening in particular. Tone, take it away.
Yeah, I'm still kind of baffled by stock market like the NASDAQ making a new all-time high. Not the full NASDAQ, but NDX. But after today, it's possible that the NASDAQ itself has also made a new all-time high. Hey guys, hey, if you want to support, please check out the affiliate page of tonevays.com. Let's go take a look at Bitcoin. I did a video this morning. I'm sure not much has changed. Well, this chart hasn't changed at all because it doesn't update until 3 or 4 hours from now. I still believe we are in this consolidation zone, and we will stay in this consolidation zone for the majority of this year. Now, this year is almost halfway done. So here we are on the weekly scale. We are right at resistance, and the most likely path is a pullback. Of course, it doesn't have to pull back. I can make the bullish case as well, especially with the current global situation and the stock market rallying. So if the stock market starts to correct, I can see people throwing their money into crypto or specifically into Bitcoin. We still have this consolidation on a daily. I'm neutral on a daily scale and I'm neutral on a weekly scale. They're both on ones, different color ones, but they're still ones. The 4-hour chart is consolidating as well. Everything is consolidating. There's really not much to add to the world of Bitcoin at the moment. I see the GBTC premium is ticking up a little bit. So there's definitely pressure and people are probably consolidating. This was the chart, Jimmy, I was talking about. This is the mining hash rate on TradingView. I don't know what formula they are using. I have it as a weekly average and it did spike right there June 1st. So I guess last week, or I'm looking at it from a weekly perspective. I mean, here is the daily. I'm not sure how they're calculating it, but it's definitely, they have it as spiking to a new all-time high. Still disappointed in Bitcoin dominance, but we still have half a year to go. Gold rallied nicely today, still in the bottom half of its consolidation. So we'll see what happens tomorrow. Silver rallied a little as well. I believe oil should be topping tomorrow. So keep an eye out for that. The S&P 500 made a new swing high. I don't understand it. I can't explain it. I am looking for a top in the S&P 500 again. Still, I was looking for a top right here off of this 9, and now I'm looking for a top off the next 9. I refer to that as a double 9, which could happen in 3 days. So probably Thursday, Wednesday, Thursday could be another potential top. I tried shorting the S&P here, got stopped out over here. I'm certainly going to be trying to short it again later this week, even though I really should be taking a break from trading. Here's what I mean about the NASDAQ. Tesla is on a very interesting candle right here. It's a very bullish candle, but look at the counts. They're identical to what they were at its all-time high close. That was the all-time high midday. That was the all-time high close before the big drop. C13, S13, ironically, the same exact thing right now, T13, S13. So here's the NDX. NDX went to a new all-time high, NASDAQ 100 index, and it just went even higher. That is incredible. The NASDAQ itself, I'm curious if the NASDAQ is at a new all-time high, and I believe that it is. The NASDAQ is now at a new all-time high as well. And the Dow Jones, I believe it's still lagging, but it's close. I believe the market should be topping. I've never been screaming for a top. I've always said it's going higher, it's going higher. This is the one time I don't think it's going higher. I do not believe we would be at this area by the end of the year. I think a much bigger pullback is on the way, but we'll see. We'll see. We could always break out. The money printer could keep going. That's pretty much it. Just a quick overview on the price. I don't have many announcements other than I will be redoing the on-demand videos. So that means I will be teaching these webinars one more time, not the options. I will be reteaching intro to trading, and I will be combining risk, position size, and leverage management with entries, exits, and stop losses into a single video where I do not teach any TA. I just teach how to enter, exit trades with proper risk management. Very interesting. These will be 7 hours each, intro to trading, and the other two combined. I'll probably be doing one this month and one next month. More information coming very soon. All right. On that note, that's it for me on the screen share.
I'm gonna, hold on. I found your article that I'm just gonna pull out quickly. All right. This is where you say,
which article is it? Which article is it?
It was the very first one you ever wrote.
The very first one, yeah.
Yeah. But what people may not realize is that the only way it is possible for a person to keep track of these individual sandwich and coffee, blah, 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 it would be very unfortunate if this is the first step to standardizing these digital wallets so that a company like Coinbase will be doing your accounting for free so that they know exactly what you spend and on what. And since the connection is not always clear, it's somewhat irrelevant if Coinbase knows how you spend your money. They are just a company. It's whether the government already has a backdoor to their data with or without their knowledge. So there you have it.
That was the very first article on my own blog I ever wrote. And that was before anyone in the space knew my name, like nobody. I just started a blog because I wanted to make business cards with my blog on it, with my blog name on it, with my blog on them instead of my Wall Street corporate business card to hand out at conferences. And I was going to attend my very first Bitcoin conference in April of 2014. And before going to that conference, I wanted to write 2 or 3 articles on my blog so that I can hand out a tone-based business card with the website to my blog. And that was the first article I wrote. So I'm happy to say I have never in my life used Coinbase.
You're nothing if not consistent, Tone. All right, that wraps up this edition of Bitcoin Brief. Thanks for joining, guys.
Fiat the Lenda S, this song is done.